Hello, everybody. This is Natsumayas here, back with another podcast from the Raises.com Top Capital Raiser Show. And so today I'm joined by a special guest, and his name is Andres Klaric. He is a Harvard Business School alumni, Wall Street veteran, and the co-founder and co-CEO of a venture capital-backed company called Fuse. So his company is looking to transform the loan origination process. And Andres, it's great to meet you on this podcast.
Nadu, thank you so much for having you here. It's an honor to be part of the conversation and really looking forward our discussion.
Yeah, the same here, and fantastic profile. And so can you just perhaps walk us through, your background? You worked at Goldman Sachs and Credit Suisse. So can you just walk us through some of your background and where you're coming from as an entrepreneur?
Yeah, so I actually started in a completely unrelated place to investment banking. I started as a car salesman. I paid for college selling cars. I paid for college, as I mentioned, in the U.S., working at a dealership in Northern Virginia. I do think that dealing with the rejection at a very early age, I was a teenager, if anything, helped me face like interviews and things that came out afterwards in life and other like social situations that you undertake. And that's not too dissimilar to like kind of once you kind of raise the bar and you go to a bank, right? I would say the biggest takeaway from my investment banking years was just the stamina, the sheer just amount of hours that you work, the expectations for excellence, the reality that despite the fact that you're not saving any lives, right? You're just checking numbers, you cannot be wrong, right? 99% right is you're still wrong in that category of business. So a lot of just the search for perfection and like the attention to detail that you develop and just the ability to just work beyond the point of exhaustion. It's something that I treasure from those days. I don't think that I've ever seen the work ethic at a level like the one you kind of uh, uh, nor you kind of develop during those years. And after that, like most investment bankers would like, and not most, but like a good chunk of folks in my cohort, I went into the buy side, right? My dream was to kind of continue into the investing world, and I usually consulting and investment banking roles uh, act as kind of platforms for aspiring buy side folks to go through. I did that pretty much until 2 3 years ago, and after pretty much a decade of investing in tech and business services companies, I decided to start my own business. And along the way, of course, I had the chance to go to business school. I had a quick pit stop at Harvard Business School, and that's where I met my co-founder a little bit over 8 years ago.
Oh, fantastic. And I mean, the hard work shows in the results. So Harvard Business School, you met the co-founder, and were there any some takeaways? Was it the network? Was it the lessons? What were some of the biggest takeaways that you had at Harvard?
I mean, I think it's a component of you go to business school like well just an accelerator for your career to switch paths to kind of network. There's multiple reasons why people go. I would call it a portfolio of reasons. Some people are just burned out too, right? And not everyone just goes there. Reality is that in most business schools in the U.S. or at least top business schools, their grades don't matter. So like just some people that they just go for 2 years to chill. And the networking happens in those opportunities, right? It's part of like the experience. I would say I went with the goal of like uh just accelerate, continue on a path like for had I wanted to continue just being an investor like I was, going to business school was the right decision. Unless I wanted to like just go into like more like public market roles in general, you go a different path. Although many people out of business school will join public market investing funds, right?
Yeah.
Uh, I went with the idea of like, hey, I want to continue being an investor. I want to expand the network, and it doesn't hurt. You can also ultimately see it as as the biggest piece of insurance from a career perspective you have, right? Like you kind of like set a floor from an earning standpoint if you want to see it through the downside protection. I almost saw it. I always just saw it as like a hey, like opportunity wise, this is like something that it really expands the set of options that I can act on. And as one professor told me there, it's not really about optionality. At some point, you're going to have to use those options. And I think I quickly realized that you don't just live off alternatives, right? You just need to actually start choosing. And I think starting Fuse, being able to do this with a classmate, it kind of like speaks volumes on like, hey, like I'm actually making choices that are pretty intentional versus just letting the just drifting through life through like decisions that are not made by myself.
Brilliant. Instead of taking the last path of least effort, you decided on the thing that is highest leverage. And so then now there's Fuse, the company, and then there's this company you're trying to solve some problems in the loan origination process. So how does the loan origination process work to those who aren't familiar?
Yeah, I mean, if frankly speaking, I was not even aware that like companies like what Fuse does today existed. Like we actually, the way that we landed into this market is because we first tried to be a direct to consumer uh, loan broker, right? So we were helping other banks, credit unions, and finance companies originate loans. And in order to do that, we had to devise kind of like an orchestration layer of technology so that someone can apply, we can vet them, and ultimately send them to other banks, credit unions, finance companies for them to like finally fund that loan. And that entire orchestration layer kind of like workflows and dashboards that needed to be built, we originally built it as an internal tool. What we didn't realize is that by virtue of building that internally, we had actually built something way more flexible than our partners that had. So we were funding people at a record rate and in record time with no mistakes. And like lenders approached us and they were like, "Hey guys, it's kind of cute that you're selling us loans, but would you be perhaps interested in like selling us your technology? We kind of like see more value in that, and we would be interested in doing so. Would you like to go that route?" So of course, like the initial reaction, it's like, oh, I don't know. Like, I mean, we've raised capital to build A, and now we're going to do B, and so we we had to build initial conviction around it. And we quickly started signing up a bunch of customers. We realized, hey, like, listen, if this is like, if we're going to follow the theory of fast moving water, then this the fast moving water is in the B2B tech side. That's kind of how we landed there. Um, what the product does today vis-a-vis what we were doing before is fairly similar. Of course, like, we made it much more robust, more enterprise ready. But in essence, like if I had to summarize what it is, it's a bunch of integrations, meaning like the ability to like run credit, fraud checks, income identity verification, all of that orchestration layer. You kind of there's a bunch of vendors you need to be able to like coordinate. Then there are workflows, right? Like how do you actually decide what is your criteria for underwriting, what type of things you do when you actually do the API calls in such a way that you don't incur a lot of costs. And the last thing is the dashboards, right? You're going to have distinct roles for which like you're gonna have the underwriters, the funders, and those dashboards should actually reflect the true nature of their job, right? So those three things are the key components of an LOS and loan origination system. And if that's kind of how what we are today, right? Like there's way more that we can be, but like our bread and butter today is those three pillars.
No, it's brilliant, and I like it when you said following the fastest moving water, and that led you there. So I guess you already answered how it integrates with the credit unions and banks. So these are the main customers, right? Credit unions and banks.
Yes, and I would add finance companies to that too. Finance companies, although they're like non-depository institutions, they do comprise a fairly material amount of our customers.
Okay, no, fantastic. Okay, So you work with these customers. What it like when I'm looking at this, what would you say are some of the biggest pieces of advice you have for lenders? Lenders that, they're not really efficient as you used to be when you first started this business.
I mean, I think that you need to be extremely empathetic with their current situation, right? Like it's not just telling them like this technology is cool, right? Like obviously they are figuring out to make money and be profitable businesses with their current tool set. So you need to make not only a technological case, right? You need to make a business case for them to actually like eh, pay proper attention to the value that you can create for them, right? Like I think that sometimes like technologists forget the fact that like, hey, like not ever if the best technology always won, then they would have like beta would have beaten VHS. There's a bunch of examples, right? The same applies in our industry. It's not like the best technology that wins. It is whoever really figures out the best way to make a business and a technological case for that particular partner, right? So the way that we approach it is aside from highlighting the power of those three pillars that I mentioned to you, it's like really showing the power of automation, right? Like kind of use it as a tool, augment the job of and the quality of time that our lenders have with their clients, right? Like we're telling them, hey, like it's not about closing your branches or firing people or things like that. It's more along the lines of, hey, if you're going to spend the same amount of time with someone, make it quality time, right? Like ensure that if, when someone is at a branch applying for a loan, instead of having to ask them, hey, I don't understand your handwriting here, should be more talking about their aspirations, like not to what do you want to do with this money? How can I help you kind of invest it? How can I help you like get the best deal on that house? Things like that are far more value added and like relationship building than like just the frustration of asking someone 50 times for a photocopy of their ID.
It makes a lot of sense. You're talking about the vision and the benefits, not just the feature. And that makes a lot of
Exactly. No, if you're talking about features, you're wasting your time. Like you need to really talk. You of course you need to pay attention to what type of features they want, but people want to talk about outcomes, not like all the gadgets. They want it's kind of like it's you watch a Bond movie, you enjoy the part of the gadgets, but you want to see Bond win, right? Like so, just let's get to the point in which Bond wins.
yeah, exactly. And so
Mm.
tech seems to be pretty slow in the finance world. But then there's some people like you that figured it out. So like, why do you think tech is really behind in finance compared to other industries?
It's first and foremost regulation, right? That's number one reason, right? Like for example, when you think about AI or black box models, good luck telling a regulator not being able to explain why a decision was made in a way that and attribute to AI, right? Like the regulator is going to approve what they can understand, right? So it's important that like you're able to kind of have not necessarily paper trail, but the equivalent of a paper trail electronically, which you can explain like same situation, same person, like same response, right? Like and you can actually explain and trace it back to a particular thing. That is very important, right? So that is one of the reasons why. And second is like, hey, like Excel is a phenomenal tool, right? Like I am a big believer that if you have a lot of the businesses are already very profitable businesses, so it's very important then again to not only talk about the technology, it's very important to talk about the business case. Why are you adding value? Why, of all the billion priorities that they have, why is it that what you're offering that is so important? And that varies case by case by lender, but I think with the three pillars that we have as an organization, those three really allow us to resonate with them in terms of like what they're missing in their current solutions.
Yeah, no, that's what, and we were discussing some of this offline. But when on the lender side, to switch gears, if I'm a lender or I'm a financial institution, I want to use your service. I want to use Fuse. How does it work? Like, do I pay a fee or do I get like origination I pay? Like, how does the it work with my business model from the financial point of
Yeah,
view? How does that work?
it's a pure SaaS play. Like it's software as a service
Okay.
type of play. So to some extent, we're not creating a market. We're kind of disrupting a market in terms of like what the tools that we bring. So um, there there are incumbents in the space that have already kind of dictated how some of the how business is done. So it's important that when you're actually ripping and replacing incumbents, that you actually kind of adapt yourself to what the industry is used to, right? Like you cannot completely change absolutely everything, right? So I do think that like following that software as a service pricing model, like for now, really benefits the way that like our customers understand the engagement and value of it.
Makes a lot of sense because you have to go with what people already believe in order to take the current demand instead of trying to change their beliefs.
You need
It's-
to minimize friction, right? Like you need to find the shortest path for them to feel comfortable with the change you're proposing, because change is uncomfortable, right? You need to make it easy for them to like make that choice. It's my job and my the rest of the organization to like really make the case for us.
and so speaking of change, at the time of the recording, the interest rates are pretty high. So, does your business or how does this business, how do you find the change in interest rates for
Mhm.
the use of this software? Does it matter or is it fast? Is it doing better because of the high interest rates? Like, how does that affect the business and
We're
what you do?
we're top of funnel, right? So we still see applications, right? I do uh, what you see is more rejections, but from our perspective, we it's not that we've seen less people applying, right? It just that like the offers are either like, people get more rejections or just the quality of the approvals that people get, they're probably not necessarily meeting what they, let's say they want to refinance, right? They're like, hey, like I'm be saving X amount of percentage. I'm not sure if it's worth my time to do this. But like the bottom line is like for our type of business, the way that we're structured, the the rate environment doesn't really affect us as much. What it really affect what it really the ones that are affected are our customers, and the way that we help them navigate a high interest rate environment is using technology to like uh, allows them to adapt to this tighter funnels, right? If your conversion funnel is essentially approving less people, then that means that your cost of acquisition are going up, right? Because you're doing more data pools and all of that. With the way that our kind of API integrations and workflows are built, it allows them to have much more of a control on how to gauge for that kind of cost of acquisition, right? So we help them kind of plan for that, automate, reduce costs that today they wouldn't be able to manage otherwise.
Brilliant. No, because you're saying is when the when the amounts of applications get denied more, then you just help the companies become more efficient, so they're able to get more through. And your software, so Fuse solves that problem of efficiency, and it's just more important in this market.
Exactly, even more important, right? Because it's cost. You need to look at more folks to approve uh, the same amount.
Yeah, no, that makes sense. And so you help companies a lot in that sense. So what are some of the future plans? Like, because this can this technology be applied to different industries, or do you have plans, or is it just you want to focus on debt, or what are the future plans?
We're going to be remain focused for now. The LOS market uh, it's a $40 billion space, right? So there's plenty of opportunity to stay there. I do think that like the applicability of our tool set, it's really like very wide, right? Like when you think about uh, lending, I can think of a bunch of examples of industries that have similar kind of process flows and workflows. A natural one is when you think about insurance, the process of like underwriting an insurance or buying a policy it's not too dissimilar. Of course, you're gonna have to make different API calls, and like the vendors for that data might change a little bit, but in the grand scheme of things, fairly similar, right? Like, so I do imagine that like uh, companies with our philosophy, if it's not us, because some companies with our philosophy will probably attack similar problems in adjacent markets. I think remaining focused for now is a core priority for us.
Got it. Because you want to be the master at what you're currently doing. Right?
Yeah, we are pretty excited about the space and the opportunity we have. We should remain focused, attack, and put all our efforts in the space that we're in.
Oh, makes sense. And so there are some people watching this, listening to the podcast or watching the video that may be in that market. They may be a lender, a loan officer, one of the either a credit union or even part of a bank. How can somebody who wants to get in business with you, how would they get in touch to learn about how your process works and to work with you?
Yeah, they can the first option is go to fusefinance.com. And the second alternative, of course, they can ping me on LinkedIn. I'll do my best to respond to them as soon as possible. I've always had phenomenal mentors in the past. So like not only to talk about business, to talk about career, I'm happy to make the time for people. And and for folks that are trying to understand their tech stack and priorities, would love to just be a sounding board and see like we can how we can actually help them, or at least allow them to compare notes on how they're thinking about next steps in their own tech journey.
No, fantastic. Because candidly, now that we wind to a close, like, I mean, you've done some great things with your career. You're in Wall Street, you're in Harvard Business School, and now you run this company. So if anyone wants to get in touch with him, please, we'll put the notes in the description to go to fusefinance.com and then to reach out to Andres on LinkedIn. So any last things you want to share before we wrap it up to close?
Well, I hope everyone has a fantastic 2024. I'm full of hope for everything that comes, and I hope that in 366 days, because we're gonna have a leap year, we are wrapping up a much better year for for the entire world and the human race.
Fantastic. Fantastic. Hey, Andres, great company. Great to meet you. And with this, head to fusefinance.com. This has been raises.com. Natsumara is the top capital raiser show. And we'll see you in the next video, everybody. Thank you.